My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in from beautiful Calgary, Alberta, we've got Dennis Wong, also known as the Wong Man, who is a real estate entrepreneur and a stock market investor. In fact, he likes to follow along the footsteps of good old Warren Buffett. That's his kind of value add looking investing strategy. And today we're going to be talking a little bit about how he integrates both real estate and the stock market into his portfolio. So Dennis, welcome to the show. Great to have you.
Well, thank you for having me, Dave.
So give us a little snapshot. What does real estate look like for you as of early 2025? And what does stock trading look like for you on a day-to-day basis in 2025?
Well, I would say, first of all, I wish I have a crystal ball to be able to say, hey, this is what's going to be in 2025. But I would say that, in investing in both markets, it is necessary, whether it's good markets and
Oh, sorry. What I was asking, Dennis, is what do you have right now? So when it comes to real estate, what does your portfolio look like? What do you invest in? What do you focus on? And when it comes to stock trading, what does that look like? Not necessarily specific stocks, but what does your day-to-day activity look like?
Right. Well, thanks for clarifying that. And I think in terms of the real estate markets, and certainly, I think we're still in a great need for more housing. So for me personally, in my portfolio right now, I'm holding, some single family, some multifamily, and myself and my partners, and also with a small group of investors, we're doing some smaller scale of multifamily in a development project, I would say,
Okay.
a new build. Yeah, new build.
In Alberta?
In Alberta, right here in Calgary. Yeah.
Nice. Yeah.
And certainly, I think the market itself it cooled down a little bit from previous year, but and also the inventory has been increasing. But I think we're still growing, and so we're working on a couple of projects and keeping busy. And at the same time, I think in the stock markets there are always like tons of opportunities, whether in good markets or bad markets, because of all the noise. If we are able to cut through the noise, you can always find something of valuable, because we're talking about there's some more than 20,000 publicly traded company around the world, right? Just the North American market alone is like close to 10,000. So there are always great opportunities that people overlook.
So when it comes to the stock market investing, a lot of people got on the whole day trading fanfare for quite a while and still are.
Yeah.
Sounds
Okay.
like you're not that. You're more of a long-term buy and hold investor if you're following Warren Buffett's strategies. At least that's my understanding of what he does. Is that
That's
kind of your
right.
preference?
Yeah, yes, absolutely, absolutely. In my way of investing, whether it's in the stock markets or in real estate markets, is all about acquiring good assets that provide good return, right? So when it comes to day trading, or whether it's like swing trading or day trading, any type of trading, and I think traders are trying to out-trade each other and make money from each other, not necessarily gaining from the underlying business, right? So my way of investing is just like in real estate. You finding good asset, good company, good product services, and growing consistently. And we're investing for growth for future. So it's certainly it's long term. So that's how I invest, and that's what I call the Warren Buffett way of investing.
Yeah. So did you start off as a real estate investor first and then start in stocks, or the other way around, or kind of both at the same time?
Good question, Dave. I would say it definitely stock. The reason being is that the stock market is a lot more liquid and flexible. Unlike real estate markets, I think most of the real estate investors started with, acquiring one or first rental property, and then second, or maybe getting into a multifamily. Regardless of which type, it does require a lot more capital, right? While in the stock markets, I think, along the way, as we all have our job and making our income, generating capital, whether you have $100 to buy a share of whatever company, right? $180 to buy a share of Google or 230 to buy a share of Apple, and anyone can do it. And you can, I mean, it's a lot more flexible for anyone to start with, and that's how I start with as well.
So why did you decide to get into real estate in addition to stocks? If stocks are stable and a lot more liquid, it sounds like why would you also add real estate into the mix?
That's I mean, that's great question. I think it's absolutely necessary for everyone. If anyone want to build wealth or a better financial success or independence, I think it is a necessity to invest in both the stock markets and the real estate. And they share lots of commonality. Fundamentally, they're the same, very similar. But stock, we are investing for growth because we're investing in active business that actively operating on a daily basis. And most of the larger business, if any one of us invest in the stock market, choosing the large cap and all those, they're global companies. So we are basically participating in those global business and growing, right? So not limited to just where we are regionally. And the growth is compounding. But on the other hand, I look at real estate is not necessarily investing for growth. It's really fundamental. It's really investing for protecting our asset. But at the same time, it generates income, right, on top of the protection. So it's a different nature. So that's how I look at it. And I would say for anyone who want to be like financially success, it's absolutely must to invest in both.
So let's say, I mean, my show is the Property Profits Real Estate Podcast. Most of the people listening or watching this
Hmm.
are real estate fans, and
Certainly.
probably most of them have most of their assets invested in real estate.
Hmm.
So, what would you suggest for somebody as kind of like the first baby steps into the stock market if they're primarily a real estate investor?
Okay. I would say for a real estate investor, they have an advantage because they already have the basic knowledge of investing, right? Like what you said, if it's anyone who want to get into the stock market just by trading in and out of the market, buy low, sell high, or something like that, um, that's not what we call investing. But for a real estate investor who already acquiring the knowledge of finding good asset and how the numbers work, right? Going through the underwriting process and all that, I would say the first step would be to learn about what makes a business a good business, right? How to find good business, anti-fragile. And especially, when we invest in the stock market, we're investing for growth, as I mentioned, looking for great business that has consistent growth in the past and also has a very good prospect of growing into the futures. And then the second step is to learn how to evaluate a business. And the same as in real estate, right? No matter how good the property or the real estate is, how much is it worth, right? Not, I mean, especially objectively in commercial real estate. So we have to learn how to evaluate a business. And then the third, the same thing is that, okay, now it's a good asset. Here's the value, but what is the price? If there's a big gap mismatch between the two, no matter how good the business or the asset is, you go, you know what? I'm not going to pay for that price because all that premium you're paying means risk, right? So that's what I meant by for a real estate investor, they have a real advantage in terms of learning how to invest in the stock market.
Okay, so if somebody's thinking, well, you're kind of doing the Warren Buffett way, why don't I just
Mhm.
look and see what Warren Buffett's investing in and buy some of those stocks? Save myself the trouble of doing all that due diligence and
Yeah,
figuring stuff out.
absolutely, absolutely. That's another great question. I would say, yeah, for anyone, if you don't really have a lot of time to look into or want to really get into investing in the stock markets, or simply just buy, Warren Buffett, their company, and underneath they own a whole bunch of operating companies as well as in the public markets as well. Not that I recommend or suggesting people to buy it, but that way you invest passively, but it doesn't take away the feeling of being vulnerable because if you don't have the basic knowledge, you always feel that you're not in control. And of course, Mr. Buffett, he can do all kind of special deals, right? Given his status and also his dominance and the size of the business. Whether he's going out to buy certain company, right? For example, in the past year or so, he's been buying Occidental Petroleum and all that. And I've been asked time after time by investors that, hey, should we buy Occidental Petroleum? The thing is that we have to understand he has all kind of special deal, right? Special
He's
dividends
getting
and
at a better
bonds.
price than we would ever get it at.
Absolutely, absolutely. So those are the advantage he has that individual investor doesn't have. I would say fundamentally is anyone who want to do anything, whether investing in the real estate or the stock markets, the most important point is the important step is to learn about it, right? To
Well,
learn
of course,
how
yeah.
to do it properly. And the moments we understand how it's work and keeping it simple, then we're more in control. Otherwise, keeping it simple, invest in ETF, invest in like what you said, right?
ETF means exchange traded fund,
Exchange
correct?
traded
Yeah.
fund, exactly. It's a basket of company, a group of companies.
It's a mutual fund, basically,
Yeah,
of the
better than
biggest
a
companies.
mutual fund. Well, mutual fund is actively managed by fund
Yeah.
manager, while ETF is primarily buying a group of company within certain industry sector, or the whole index. So as a diversified way of investing and paying a very low fee because it's very passively
Mhm.
managed. Right? So that's another way. And the downside is that you're still subject to the market volatility. I think any type
It's
of
very diluted, right? You're
very
investing in a,
diluted. Yeah.
yeah.
I look at it as anyone who doesn't have time or doesn't have the in-depth knowledge, proper knowledge to pick company to invest in. ETF is a good way to go. At least
Mhm.
allow investor to keep up with the market, right? Not being falling behind.
Yeah. So Dennis, you've been doing this for some time.
Mhm.
I don't know if this is your full-time gig or is this a part-time thing that you're doing, but what, how many different companies would you recommend like the average person to be invested
Well, first of all, I started with, learning to invest and also investing along with my original career profession, being an engineer. And it got to the point that now I pivoted to being a full-time investor in both real
in?
estate and invest in the stock market.
Mm-hmm.
So for average people, it all comes down to how you approach investing.
Mm-hmm.
So for most of the investor, they're buying anything that is hot and what they heard on TV, on social
On
media,
YouTube.
on
Yeah,
yeah.
yeah, yeah.
And but if you are truly investing the Warren Buffett way and truly looking at it as buying real estate, right? Buying multifamily real estate business, or buying any of the company that you buy, whether it's one share or 1,000 share, you look at it as you are the owner of the business. If you look at it that way, it all comes down to how much time you have to look at each of the business. If you look at your business owner, there's no difference than just looking around in your neighborhood, in your community, and say, hey, you know what? I think I'm going to invest in this auto body shop, that restaurants, or the other one is, hey, this company is providing IT service to small family-sized business, providing all the IT support, cybersecurity. I like their business, and I'm going to invest in it. And every business we invested in it, we are the owner. So we better spend enough time to understand the business, understand the number to a certain degree, not to the extent of running or operating the business, but really being an owner. And that's what I would call being a responsible owner or investor. So according to Buffett or Charlie Munger, actually, Charlie Munger always say that consider yourself given a punch card, a lifetime punch card of you can only punch 20 holes. That's
Mm.
it. Okay. And you can punch all 20 holes at a time or one at a time over your lifetime of investing. And that's what his number. Okay. I think it vary depending on the knowledge, the time that each one of investor can have.
So at this point, you've analyzed a lot of different companies. How long does it kind of take you as an experienced investor to vet a company and decide if it's a go or a no-go?
Ah, so it depends. I have a specific process, which I also share with my group of investor. So there's from I go through typically from sector through industries, and I would look at within a certain sub-industry, rank all the company. And then I would go through them one by one to go through, all my checklist. And then there's a process um, to qualify them as, whether they are a great company with outstanding businesses, a management team, for example. And then as I go further down the rabbit hole, and at certain time, certain point, I would decide, well, it's good, but not good enough for me. So that's it. Or if I go, hey, it's really good, I need to go to the next step and doing my quantitative analysis and ultimately calculating how much the company worth, and then put them on the watch list. And then when the time is right, what Warren Buffett say, we only pay for the fair value or a discount, or what we call a margin of safety.
Got it. Yeah,
Yeah,
no, that makes a lot of sense. It's a very intricate process to
it
do it
is.
right.
It is
Yeah,
just like investing in real estate.
exactly. To do it exactly. It's you got to take the emotion out of it. Dennis, this has been fun. If people want to connect with you, where should they go?
Well, look me up on Instagram. I often provide updates, keeping everybody informed through Instagram, and certainly message me there and get in touch with me. You can look up Dennis the Wong Man on Instagram or other social media.
Awesome, Dennis. Thanks for being on the show.
Well, thanks for having me, Dave.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.